Anticipated 50% growth in the electric vehicle EV market by Q1 2025, impact on automotive, transportation, and renewable energy sectors. Overview. The electric vehicle EV market is on the verge of a significant transformation, with projections indicating a 50% growth by the first quarter of 2025. This growth is expected to have widespread ramifications across the automotive, transportation, and renewable energy sectors globally. In 2023, approximately 14 million electric cars were sold worldwide, marking a remarkable 35% increase from the previous year, with dominant markets in China, Europe, and the United States. This trend is anticipated to continue, with sales expected to reach around 17 million in 2024, driven by key players like Tesla and Volkswagen adapting their strategies to maintain and grow their market share. Market dynamics and competition. The surge in the EV market is largely fueled by intense competition among major automakers, particularly Tesla and BYD, which together accounted for 35% of global EV sales in 2023. Tesla's aggressive pricing strategy, which included significant price cuts, has prompted competitors to follow suit, resulting in an overall price reduction of up to 10% for electric vehicles. This has intensified competition and made EVs more accessible to consumers. In the first quarter of 2024, electric car sales exceeded 3 million units, representing a 25% increase year-on-year, with China leading the charge by selling nearly 1.9 million electric cars. Emerging markets including India and Brazil also exhibited impressive growth, with sales increasing by over 50%. This trend reflects a broader shift towards electrification in diverse markets, signaling a potential shift in global automotive dynamics. Consumer preferences and trends. A significant trend within the EV market is the growing consumer preference for larger electric vehicles, particularly SUVs. This shift is driven by demands for longer-range vehicles. Although it raises concerns regarding the environmental impact of larger battery sizes on supply chains. Despite this preference, affordability remains a barrier, particularly in emerging markets where the upfront costs of electric vehicles are generally higher than those of internal combustion engine ICE vehicles. However, the total cost of ownership (TCO) for EVs may be lower due to reduced operating costs, and in China, electric cars are beginning to achieve price parity with ICE vehicles. Investment trends and challenges. Although venture capital investment in EV startups declined in 2023, investments in upstream supply chains for critical minerals and battery technologies remain strong. The strategic focus on securing raw materials essential for EV production underscores a shift in the industry towards long-term sustainability and competitive advantage. However, challenges such as market volatility, high interest rates, and economic uncertainties could hinder growth in 2024. Key events timeline. 2023, global electric car sales reached nearly 14 million, a 35% increase from 2022. Major markets included China 60% of sales, Europe 25%, and the United States 10%. Q1 2024, EV sales surpassed 3 million units, with significant growth from China and emerging markets. The trend toward larger vehicles continued. 2024, projections suggest electric vehicle sales could reach 17 million, driven by new entrants and increased competition from companies like BYD and emerging Chinese brands. 2025, a 50% growth in the EV market is expected, leading to strategic adaptations by major automakers like Tesla and Volkswagen. Conclusions. The EV market is poised for substantial growth, driven by robust sales trends, shifting consumer preferences, and increasing competition. While challenges around affordability and market volatility persist, the strategic focus on securing supply chains and the introduction of more affordable models could facilitate broader adoption in the coming years. The expected transformation of the automotive landscape by Q1 2025 emphasizes the importance of adapting to new market realities and consumer demands as the industry moves towards a more sustainable future. This report summarizes anticipated developments in the electric vehicle market, highlighting its potential impact on various sectors and the strategic responses from key players as they navigate this rapidly evolving landscape. Continued monitoring of these trends and adaptations will be essential for stakeholders aiming to capitalize on the growth opportunities within the EV market. The anticipated 50% growth in the electric vehicle EV market by Q1 2025 will influence the automotive, transportation, and renewable energy sectors globally. A few counterintuitive insights from the content highlight key trends and potential challenges in this rapidly evolving market. 1. Sales concentration. While the global sales figures for electric cars show impressive growth, nearly 95% of these sales are concentrated in just three major markets: China 60%, Europe 25%, and the United States 10%. This concentration indicates that even as the market expands, the majority of companies outside these regions may struggle to gain significant traction despite overall growth projections. 2. Affordability versus market growth. Despite the rapid growth in sales, affordability remains a significant barrier, especially in emerging markets. While EVs are becoming more popular, their upfront costs continue to be higher than traditional internal combustion engine (ICE) vehicles. This presents a paradox where increased sales do not necessarily equate to wider accessibility, particularly for lower-income consumers. 3. Consumer preferences. There is a notable consumer shift towards larger electric vehicles (EVs), particularly SUVs, despite concerns around their environmental impact due to larger battery sizes. This trend contradicts the expectation that eco-conscious consumers would gravitate towards smaller, more efficient models. Instead, the demand for larger vehicles is driven by the desire for longer ranges, which further complicates the sustainability narrative of EV adoption. For battery supply chain issues, the growth in EV sales is accompanied by increased demand for critical minerals used in batteries. Larger EVs require bigger batteries, which exacerbates supply chain pressures and raises concerns about sustainability. The irony lies in the fact that as the market pushes for electrification to reduce emissions, the increased demand for larger batteries could undermine these environmental goals by straining resources and increasing carbon footprints. 5. Investment volatility. The decline in venture capital investments in EV startups reflects a more volatile market landscape. As competition intensifies, investors may see startups as riskier bets, despite the growth potential in the EV sector. This counterintuitive trend of declining investment in a growing market suggests that the market's maturity could lead to consolidation and increased barriers to entry for new players. 6. Second-hand markets and accessibility. The emergence of second-hand electric vehicle markets is a double-edged sword. While it could facilitate broader adoption by providing more affordable options, it also highlights the initial high costs associated with new EVs. The growth in second-hand markets could paradoxically point to an unsustainable model where initial prices continue to limit access to new technology. 7. Regulatory changes and market dynamics. The phase-out of subsidies in key markets like Germany has led to a decrease in electric vehicle sales, highlighting how dependent the EV market is on government support. This counterintuitive reliance on subsidies raises questions about the true market viability of EVs without ongoing governmental financial incentives. 8. Rising competition and market share. The dominance of companies like Tesla and BYD in the EV market is eroding the market shares of traditional automakers. However, this competition often leads to price wars that could reduce profit margins for all players involved. The irony here is that while competition typically drives innovation and lower prices, it may also lead to financial instability for companies struggling to keep up. 9. Global trade dynamics. The increasing export of used electric vehicles from established markets to emerging economies could create a paradox where the countries that are leading in EV technology are also exporting older models, potentially undermining their own market growth. This dynamic complicates the narrative of a straightforward transition to electrification globally. 10. Battery technology and environmental footprint. As companies explore new battery technologies, the shift towards larger models could negate some environmental benefits associated with electrification. The counterintuitive aspect here is that while innovation in battery technology aims to reduce emissions, the focus on larger vehicles could lead to higher overall emissions if not managed properly. These insights illustrate the complexity and challenges facing the EV market as it seeks to grow and adapt in the coming years. The interplay between consumer preferences, market dynamics, regulatory frameworks, and environmental concerns will shape the future of the automotive landscape in ways that may not always align with initial expectations. The anticipated 50% growth in the electric vehicle EV market by Q1 2025, as highlighted in the report, has profound implications for the automotive, transportation, and renewable energy sectors. While many aspects of this growth have been emphasized, several critical points may be overlooked, yet they are significant in shaping the future landscape of these industries. Overlooked key insights. 1. Emerging market dynamics. Market concentration. The report indicates that nearly 95% of global electric car sales in 2023 were concentrated in China, Europe, and the United States. While this is a well-known fact, the implications of such concentration are often underestimated. The success of the EV market in these regions can heavily influence global supply chains, manufacturing strategies, and consumer perceptions. If these markets face economic challenges or regulatory changes, it could have a cascading effect on the global EV landscape. Rapid growth in emerging markets. Sales in emerging markets like India and Brazil, while still low, are increasing significantly. For instance, India saw a 70% year-on-year increase in electric car registrations. These markets, if nurtured, could evolve to become substantial contributors to global EV sales, impacting everything from manufacturing techniques to supply chain logistics. 2. Consumer preference shifts. Larger vehicle demand. The trend towards larger electric vehicles, particularly SUVs, is noteworthy. While many may see this as a simple consumer preference, it has far-reaching implications. Larger vehicles require bigger batteries, which increases demand for critical minerals and affects the sustainability of supply chains. This trend could also lead to higher emissions during the manufacturing process and heavier vehicles, leading to greater electricity consumption on the road. Policymakers need to consider these factors when promoting EV adoption. 3. Affordability challenges. Total cost of ownership (TCO) versus upfront costs. The report mentions that despite the long-term cost advantages of EVs, lower fueling and maintenance costs, the upfront purchase price remains a barrier, especially in emerging markets. This disconnect is significant. While the TCO may favor EVs, the initial financial burden can deter potential buyers. This emphasizes the need for targeted subsidies, innovative financing models, and more affordable vehicle options to accelerate adoption. 4. Investment trends. Venture capital decline. The decline in venture capital investments in EV startups signals a potential cooling of enthusiasm in the sector. While this might indicate market maturation, it could also mean that innovative technologies and new entrants that could disrupt the market may struggle to secure funding. This could stifle innovation and slow down the pace of technological advancement in the EV space. 5. Battery supply chain vulnerabilities. Critical minerals demand. The report highlights the robust investment in upstream supply chains for critical minerals and battery technologies. However, this demand for critical minerals, particularly lithium, cobalt, and nickel, raises concerns about sustainability, ethical sourcing, and geopolitical risks. Many investors may overlook the long-term implications of these supply chains, which could become bottlenecks or targets for regulatory scrutiny. 6. Regulatory landscape. Impact of subsidy changes. The report notes that changes in subsidy structures, such as the phasing out of EV purchase subsidies in key markets, could significantly impact sales growth. The interplay between government policy and market dynamics is crucial for understanding future trends. For instance, if incentives are removed too abruptly, it may lead to a sharp decline in EV sales, reversing momentum that has been built up over the years. 7. Second-hand market potential. Emerging second-hand market. The development of a second-hand market for electric vehicles is a significant trend that may be overlooked. As the stock of electric cars grows, the resale market will be crucial for making EVs accessible to a broader audience, particularly in markets where new vehicle purchases are financially unfeasible. This aspect can drive down costs and promote wider adoption, enhancing the overall sustainability of EVs. 8. Global competition. Chinese market influence. The rapid rise of Chinese manufacturers like BYD and the impact of their competitive pricing strategies may be underestimated. As these companies expand globally, they could challenge established players and reshape the competitive landscape. This could lead to increased price wars, affecting margins and potentially leading to consolidation in the industry. Significance of the overlooked points. Understanding these overlooked aspects is vital for various stakeholders. For policymakers, they must recognize the interconnectedness of market dynamics and the implications of regulatory changes on consumer adoption. A nuanced approach that considers both immediate and long-term impacts is necessary for crafting effective policies. For investors, awareness of the challenges associated with critical mineral supply chains and the potential for innovation in the second-hand market can inform investment strategies. Identifying opportunities that align with emerging trends could yield significant returns. For automotive manufacturers, these insights can guide strategic planning, particularly in terms of product development and market positioning. Understanding consumer preferences and affordability challenges can help manufacturers create targeted offerings that resonate with diverse market segments. For environmental advocates, recognizing the potential environmental impacts of larger vehicle trends in critical mineral sourcing can inform advocacy efforts aimed at promoting sustainable practices within the EV industry. In conclusion, while the anticipated growth in the EV market presents numerous opportunities, it is crucial not to overlook the intricate dynamics at play. By addressing these insights, stakeholders can better navigate the evolving landscape and contribute to a more sustainable and inclusive transition towards electric mobility. The anticipated 50% growth in the electric vehicle EV market by Q1 2025 is a significant development that is expected to influence the automotive, transportation, and renewable energy sectors. Here are 4 valuable points for in-depth analysis and discussion. 1. Market dynamics and competitive landscape. The electric vehicle market is primarily driven by fierce competition among key players like Tesla, BYD, and traditional automakers adapting to the EV revolution. The combined market share of Tesla and BYD, accounting for about 35% of global EV sales in 2023, exemplifies the competitive pressure that encourages price cuts, innovation, and strategic shifts among manufacturers. This intense competition has led to an up to 10% reduction in EV prices, reflecting a broader trend in which automakers are compelled to enhance their value propositions to retain market share. The declining prices, while beneficial for consumers, present challenges for manufacturers in maintaining profitability. Furthermore, emerging players in the market, particularly from China, are rapidly gaining ground, prompting established brands like Volkswagen to reassess their strategies and positioning within a changing landscape. 2. Consumer preferences and trends. There is a clear shift in consumer preferences toward larger electric vehicles, EVs, notably SUVs, driven by the demand for longer range options. This trend not only reflects changing consumer needs but also has implications for the environmental impact of EV production, particularly concerning battery sizes and the associated demand for critical minerals. Larger vehicles require larger batteries, which can exacerbate supply chain challenges and increase the carbon footprint of manufacturing processes. The growing popularity of SUVs in the EV segment raises policy considerations regarding emissions and resource management. Moreover, understanding consumer behavior and preferences will be crucial for companies looking to capture market share in a competitive environment. 3. Affordability and total cost of ownership (TCO). Affordability remains a significant barrier to EV adoption, particularly in emerging markets where upfront costs are generally higher than those of internal combustion engine (ICE) vehicles. While the total cost of ownership for EVs can favor consumers due to lower operating costs, the initial price remains a critical factor in purchase decisions. The disparity in prices between EVs and ICE vehicles is narrowing, particularly in markets like China, where electric cars have begun to achieve price parity with ICE models. However, the challenge of making EVs affordable for mass-market consumers persists, especially in regions with lower average incomes. Policymakers and manufacturers must address this issue through subsidies, incentives, and the development of more affordable models to accelerate widespread adoption. 4. Investment trends and supply chain dynamics. Recent trends indicate a decline in venture capital investments in EV startups, reflecting increased market volatility and competition. However, investments in upstream supply chains for critical minerals and battery technologies remain robust, highlighting a strategic pivot toward securing resources essential for EV production. The focus on critical minerals such as lithium and nickel is vital for sustaining growth in the EV market, and companies are increasingly seeking long-term contracts with mining firms to mitigate risks associated with supply chain disruptions. This shift underscores the necessity for automakers to enhance their supply chain resilience and ensure access to raw materials. Additionally, the geopolitical landscape and trade policies will play a crucial role in shaping the future of EV supply chains and investments in the sector. In summary, the anticipated growth in the EV market presents opportunities and challenges across various dimensions, including competitive dynamics, consumer preferences, affordability, and investment trends. Understanding these key points will be essential for stakeholders in the automotive, transportation, and renewable energy sectors as they navigate the evolving landscape of electric mobility. Here are 3 famous historical cases that illustrate similar themes of market disruption and adaptation in response to technological advancements. 1. The rise of the personal computer (PC) market in the 1980s. The introduction of personal computers in the 1980s transformed various sectors, including business, education, and entertainment. Companies like IBM and Apple adapted their strategies to capture market share in this burgeoning sector. IBM initially focused on creating a compatible system that appealed to businesses, while Apple targeted consumers with user-friendly designs. The rapid growth of the PC market, driven by increasing affordability and the emergence of software ecosystems, led to fierce competition and market shifts, with newer companies like Microsoft emerging to dominate software. This case highlights how established companies must adapt to technological innovations or risk losing market relevance. 2. The shift from horse-drawn carriages to automobiles in the early 20th century. The transition from horse-drawn carriages to automobiles in the early 20th century marked a significant transformation in the transportation sector. Pioneers like Henry Ford revolutionized the automotive industry with the introduction of assembly line production, which drastically reduced costs and made cars accessible to the masses. Traditional carriage manufacturers struggled to adapt to this new reality, while new entrants focused on creating innovative automobiles. The increased automation and mass production methods not only transformed the automotive market but also reshaped urban planning, infrastructure, and societal norms around transportation. 3. The telecommunications revolution with the introduction of mobile phones in the 1990s. The telecommunications industry underwent a dramatic transformation with the widespread adoption of mobile phones in the 1990s. Companies like Nokia and Motorola, which were leaders in the fixed-line telephone market, had to pivot their strategies to compete in the mobile sector. The introduction of mobile technology led to the decline of traditional landline services and required significant investments in infrastructure and research to develop new products. As consumer preferences shifted towards mobility and convenience, the market saw an influx of new competitors, resulting in a rapid evolution of technology, including smartphones, which fundamentally changed how people communicate and access information. These historical cases underscore the importance of adaptability and innovation in response to disruptive technologies. A theme that resonates with the current anticipated growth and transformation in the electric vehicle market. The electric vehicle (EV) market is poised for remarkable growth, with predictions indicating a 50% increase by Q1 2025. This surge will have profound implications across the automotive, transportation, and renewable energy sectors globally. Below are key trends and predictions that will shape the future of the EV landscape. 1. Market dynamics and competitor strategies. As the EV market grows, major players like Tesla and Volkswagen will adapt their strategies to maintain and enhance their market share. Tesla's aggressive pricing strategies, which included notable price cuts in 2023, are likely to continue, prompting competitors to follow suit to remain competitive. This price competition will likely drive down the cost of EVs, further making them more accessible to a broader consumer base. 2. Sales projections and consumer trends. By 2025, global EV sales are expected to reach approximately 24 million units, driven by continued expansion in key markets. The demand for larger electric vehicles, particularly SUVs, will dominate sales as consumers increasingly favor vehicles with longer ranges and more space. However, this trend raises concerns about the environmental impact of larger batteries, which require more critical minerals. Emerging markets, particularly in India and Brazil, are projected to contribute significantly to sales growth, with a potential 50% increase in EV sales in these regions. Increased consumer awareness, supportive government policies, and the introduction of affordable models will fuel this growth. 3. Affordability and market penetration. Affordability remains a critical barrier to EV adoption, particularly in emerging markets. While the total cost of ownership for EVs is favorable due to lower operating costs, the initial purchase price is still higher compared to internal combustion engine (ICE) vehicles. However, price parity is expected to be achieved in several markets by 2025. Especially as battery prices continue to decline and more affordable models are introduced. China is leading the charge towards affordability, with many electric models priced competitively with ICE vehicles. If this trend continues, it may set a precedent for other regions, encouraging mass adoption. 4. Investment trends and supply chain dynamics. Investment in EV infrastructure and supply chains is expected to remain robust, particularly in battery technologies and critical minerals. Despite a decline in venture capital for EV startups in 2023, investments in upstream supply chains are likely to grow as automakers and investors seek to secure raw materials essential for EV production. Battery recycling and alternative battery technologies such as solid-state and sodium-ion batteries will attract increased investment. These innovations aim to improve efficiency and reduce reliance on scarce materials like lithium and cobalt. 5. Technological advances and innovations. The next few years will witness significant advancements in EV technology. Improvements in battery efficiency, charging speed, and energy density are anticipated, enhancing the driving range and overall performance of electric vehicles. Additionally, the expansion of charging infrastructure will address range anxiety, making EVs more appealing to consumers. Moreover, the integration of artificial intelligence and machine learning in EV systems will enhance user experience, optimize energy consumption, and improve safety features. 6. Global policy and regulatory environment. Government policies will play a crucial role in shaping the EV market. Stricter emission regulations and incentives for EV adoption are expected to proliferate globally, particularly in Europe and North America. The gradual phasing out of subsidies in some regions may create challenges. Yet the overall regulatory push towards sustainability will favor EV growth. 7. Environmental and social considerations. As the market expands, environmental concerns regarding battery production and disposal will gain prominence. The demand for sustainable practices in the EV supply chain will increase, with consumers becoming more conscious of the ecological impact of their choices. Companies will need to demonstrate transparency and commitment to sustainability to maintain consumer trust. 8. Emerging markets and global trends. Emerging markets will increasingly become significant players in the global EV landscape. Countries like India and Brazil are expected to see a surge in EV sales driven by local manufacturing initiatives and government incentives. As these markets develop, they will contribute to a more diverse and competitive global EV ecosystem. Conclusion: the future of the EV market is bright. With a projected 50% growth by Q1 2025. This growth will not only reshape the automotive industry but also influence transportation and renewable energy sectors. As major players adapt their strategies, consumer preferences shift towards larger models, and investment in supply chains and technology continues, the transition to electric mobility will contribute significantly to global sustainability goals. The ongoing evolution in the EV market will require stakeholders to remain agile and responsive to emerging trends and challenges.